It's interesting you said that the gold silver ratio is about to or is likely to continue going up because last time it happened or this happened when the silver ratio gold silver ratio spiked up in a vertical line, it collapsed almost immediately. In fact, that's been the
Right.
trend according to this chart. According to history, we should see either very soon either a collapse in gold or a skyrocketing of silver prices. But you're saying that's not going to happen yet. Why not?
I'm very unlikely. Well, first of all, let's think of the global economy facing significant tariffs from the U.S. So just look at China. Well, China, Japan, Germany, the top three exporting countries on the planet. Their GDP is about the same as U.S. Exports are about 25% of the economy. Compared to the U.S., about 10%. It's not a big deal. Germany, it's 50%. So talking about a massive predatory exporter, that's Germany. And their average interest rates are below 2%. Are you going to see demand pull from them from anything as they face tariffs from the U.S. where they've been exporting to for the last decades, particularly post World War II? Very unlikely. This is a paradigm shift. This is a shift that is, some of us have been pointed out. Here's a quote I used when I was in the 90s in the trading pits. I got my MBA at night, and I learned in grad school or MBA how great free trade was. And in the trading pits, I learned, yeah, everybody wants free trade as long as they can run net exports with the US. Well, that's being shut off. Bottom line is it means major pressure for all the demand for all the industrial metals, which are synonymous, particularly closely with the stock market, and silver is one of them. Yeah, it's always good for things like solar panels, but we're certainly getting more and more demand for there. But it's the process of gold demonetizing all precious metals, all markets, particularly silver, forever. The bottom line from that chart is what's never happened. We've never had a high in the gold silver ratio with the U.S. stock market this high. And that's my point is at some point, yes, it should revert rapidly, but is it going to be from a much higher level? At right now, that seems to be trajectory, unless we can have some kind of shock surprise
Yeah.
where the U.S. stock market can take off, the rest of the world will do okay. We can just come out of this. But remember, all the world's starting to tilt towards easing. The U.S. is waiting. It's the trajectory right now isn't happening. Basically, to end with this, you typically need a bit more of a flush and a bottom and something to stop it. You need that money printer to get turned on, and right now it's not being turned on.
Okay. Can you answer the question that you posed in this article here? Is gold,
Yes,
silver, 100 front running global recession? And then you talked about
yes.
the ratio versus the unemployment rate. Tell us, Mike, what is the relationship between this ratio and the unemployment rate per your findings?
Yeah, so I've enjoyed writing about this one forever. When you analyze gold, silver, it usually goes up when the volatility, the next VIX volatility index is bottoming and going up. That's one example. Gold, silver almost always goes, and that's just starting. Gold, silver almost always goes up when unemployment's going up. It's doing that. It almost always goes up when the stock market goes down, and that's what it's doing. So, question is, where do those trends end? It's front running, definitely. It's the question answer is what I'm thinking. I think we are heading towards that global recession with good reason. But again, even before Trump was elected, these were the trajectories in the markets. Gold silver ratio was already advancing. Gold versus crude oil was already advancing. Gold versus most commodities was already advancing. It was going that way. Central banks are buying gold, not really
Yeah.
Bitcoin. So that's my point. These are pre-existing trends, and now it's got a pretty good catalyst for it to happen.
Here's my question. If the gold market has been this effective at sniffing out recessions in the past per this indicator, why not just talk to gold investors about what they think? Because it seems like the gold market's very prescient in forecasting slowdowns and recessions and falls in the equity markets. But per your point, perhaps it's just a coincidence. Perhaps it's just central banks buying gold at this particular point in time. But maybe they know something we don't. I don't know. How would you interpret? What is the gold market looking at? Is my question to determine that there should be some sort of slowdown. Like you said, it's front running a recession.
It's becoming the default go-to. We've had issues with U.S. Treasuries, people talking about the potential end of the U.S. exceptionalism trade. But it's also how it works psychologically. It's part of the reason I'm bearish things like Bitcoin and bullish things like gold. We've had major negative sentiment in gold for 4 years. That's usually the time you want to look to buy an asset when
Yeah.
everybody hates it. Usually the time you want to sell it was when it gets really expensive and everybody loves it, i.e. Bitcoin. And so one thing I used to like to watch is roping in that digital asset is that Bitcoin to gold ratio. I mean, it's been going up mostly forever, but it's stalled at the same level since 2021. So sentiment, I analyze that a lot. I like to look at what's happening in futures. Um, and it's a key thing I also like to mention is that those 4 years of people say, I don't care about gold. And historically, me being in gold space for decades, is people say, well, why should I buy gold when I can get a return in the Nasdaq? That's what I think the sentiment's shifting, and you're seeing it in gold. The problem is it's moved too far. And now I don't know anybody who's not bullish gold. So it's a little bit pricey, but bigger picture, it's what's going to matter by the end of the year. And the way I like to put it is this way. This is a year where volatility, the VIX volatility index bottom at basically about a 6-year low last year. It's on a 200-day basis. It's obviously going up now. And we're tilting over, I think, much away from a buy and hold risk assets market to a much more of a tactically trading market. So on the year, gold's up about 28%.
Yeah.
Bitcoin's essentially unchanged, and the S&P 500 is down about 6%. I just expect that, sure, if it's a bear market, which I think it is, I expect potentially a lot of volatility in that, a lot of it hopium, a lot of false expectations for the old days to go back. But by the end of the year, and as we tilt lower, to that trend to continue, i.e., gold outperforming most assets and things highly in risk assets, particularly highly speculative risk assets like Bitcoin, to continue lower.
Well, this is the gold Bitcoin chart. Like you said, gold up 28%, Bitcoin slightly down, kind of flat. I'd like to draw your attention to first this part of the chart here from February 25th, or the beginning of February to early April, when the two assets have diverged. Gold has gone up while Bitcoin has trended down. This divergence stopped around the beginning of April after Liberation Day, when you see both gold and Bitcoin moving up in the same direction. Not so stocks. Bitcoin and the NASDAQ have historically had a close correlation, but ever since the beginning of April, which is 3.5 weeks ago, we've seen gold and silver move in the same direction. I know a lot of this has to do with the DXY just going down, but is that the only narrative here?
On that day that everything bottomed was the day that the VIX peaked at 60. That's also the same day that Bitcoin bottomed around 75,000, the S&P bottom around 5,000, and the 10-year note yield bottom around 4%. Poof, they all go right back up. The fastest horse in the race is Bitcoin. Gold had a short-term dip there because of margin calls, but it's been the enduring recovery. And that's my point. On the year, it's up 25%. Bitcoin's unchanged. The thing is, let's be careful about being fooled by randomness.